One moment. Hi, everyone. Thank you for having me today. I'm really glad to be able to present this material to you. Many of you may not be familiar with Golden State Finance Authority. We have an administration office up in Sacramento. So I wasn't able to travel down in person tonight, so thank you for having me via Zoom. As I talk about Golden State Finance Authority and down payment assistance in particular, I would like to use a slide presentation to cover the material. So if you'll bear with me a moment, I'm going to share my screen and we're going to look at a slide presentation, and I want to make sure it's working. So okay, can you all see the first slide with a picture with a little house sitting on a pile of money?
Yes.
Okay, great. Then we are here. So I want to open up the topic tonight by first asking you all a question. What could your buyers do with $10,000, $20,000, or even $30,000 out of, what could they do with that money in order to buy a home? Many times we find that the biggest challenge people have is just having cash resources to buy a home. So if you had a source to provide them $10,000, $20,000, or $30,000, could that help you close more sales transactions? As this is about a win-win for you and the buyer. We all know we have jobs to do. We are here to make mortgage loans. We are here to make real estate sales. But at the end of the day, I want to be changing people's lives. And so I've been working with this agency, Golden State Finance Authority, for many years now. The company itself has been around for 30 years here in California, supporting affordable home ownership. And our primary focus is on working with a network of lenders throughout the state to provide home ownership programs that help people with the financial part of buying a home. We've been able to help over 85,000 people to purchase homes in the last 30 years. We have provided over $660 million in down payment assistance funds. But the reason that we're so focused on home ownership as an organization is because the benefits of the home ownership go well beyond just the financial benefits. We know, based on the US Census, the Federal Reserve Census, that real estate is a large factor of net worth. In fact, they estimate that someone who rents has a net worth of $10,400, but if they own a home, their net worth is $396,000. But when people buy homes, they often put their roots down in neighborhoods. They put their roots down in their jobs. They get more civically engaged in their neighborhoods. And this leads to a lot of different benefits, including increasing educational achievement and their health, and even a reduction in crime. And so our job is to provide a way for people to purchase homes in a very unaffordable state, such as California. And by creating programs where we link up a source of money for down payment with a first mortgage loan. And so they come hand in hand when you work with GSFA. You're getting a mortgage loan and you're getting down payment assistance. Let me show you what that looks like in terms of the impact it can have on a home buyer. In this example, I am using what would be the maximum first mortgage loan that they could use or do with our programs without coming in with money of their own. Okay, so we have a first mortgage loan limit that we can lend up to. We're not able to do jumbo loans. We go up to what's considered the conforming loan limit. But if they do an FHA transaction, we actually can finance in their upfront mortgage insurance. So this example is an example of like the highest loan amount that they can use the programs for without coming in with their money out of their own pocket. So think of it like you're talking to a buyer about purchasing a home with little to no money out of their own funds. And so what that looks like is a purchase price of $794,000. Now, does that fit everyone in every market? No. but we are mostly working with low and moderate income borrowers, moderate income. Okay, so don't think just in terms of low income borrowers, but low and moderate income borrowers. So at a purchase price of $794,000, the first mortgage on an FHA loan is 96.5% LTV. With the upfront mortgage insurance included in that loan transaction, their first mortgage is $779,964. And then what we do is we calculate their down payment assistance on that number. And so the scenario I'm showing you here today is a 5% down payment assistance piece. And so 5% of $779,964 is $38,998. That's what this program would make available to them for down payment and closing costs. Now that is more than enough to cover the 3.5% that is required for the down on an FHA loan of this size, $27,802, and still would leave this home buyer with $11,000 to put towards their closing costs. So this is an example of the impact it can have when someone has no cash out of pocket, but they want to buy a home. Now, in a lower market, you could have a loan that maybe is $363,000, or the purchase price is $370,000. Again, the down payment assistance is calculated at 5% of the total first mortgage loan. So this example is a little lower priced house, $370,000. The loan is around $363,000. The assistance they're getting is $18,000, enough to cover the down and a little bit in change to help them with closing costs. That's the impact that down payment assistance can have on a home buyer. But you may have thought about down payment assistance in the past and hesitated from telling your clients about it, or working with lenders, or referring to programs, because in the past, some of these down payment assistance programs have been very difficult to work with. Sometimes they were only for first-time home buyers. In fact, there are programs today that are great for first-time home buyers, but you're not always working with a first-time home buyer. Sometimes people, such as real estate agents, don't want to do or work with down payment assistance programs because they think that they're harder to qualify for, or they're going to take longer to close, which puts your whole transaction at risk, or that they're too much work for you or your lender. Oftentimes, people think that a down payment assistance program is only available if you have low income, or if you have no savings of your own, you have no cash savings, or you have exceptional credit. All of these things were reasons why people have hesitated from either using down payment assistance to buy a home or telling clients about down payment assistance to help them. But I'm here today to tell you about the flexibility of the programs with Golden State Finance Authority, because we have been working with home buyers for over 30 years and making our programs as accessible as possible. What that means is that people can purchase or refinance and get down payment assistance anywhere in California, as long as it is an owner-occupied residence. Qualifying for our programs is easy. You don't have to be a first-time home buyer. We have programs that go as low as 620 FICO scores, and that's not perfect credit. And our debt to income ratios can go as high as 50%, and in some cases, even 55%. It is not going to create any delays in your loan or escrow process, and I'll show you why as we go along. You have at your disposal, or at your home buyer's disposal, the normal 30-year fixed rate mortgages that you're all used to, FHA, VA, and USDA government loans, as well as conventional loan financing. And the down payment assistance, you're going to hear me say DPA sometimes. That's what that means. Down payment assistance is very flexible. In fact, up to 5.5% is available. The funds can be used for down payment, for closing costs, or be put towards the principal on the first mortgage. We'll talk about how that looks as we go through some of the guidelines. But they also, that down payment assistance can also be combined with their own funds. So if you're in a market where a home price is more than 700,000. As long as someone is able to put cash towards the transaction and bring their loan amount down to our maximum loan amount, they can still use the program. So they can combine our down payment assistance with their own cash resources, maybe gift funds from a family member, or if they qualify for some other program and they've had resources from those programs as well. They can combine funds. So let me share with you a little bit more about the guidelines. But as I do that, I just want to say, I'm here to give you an overview of the programs, how they work, and then give you the tools to refer your borrowers to our lenders, who can then look at their specific situation and qualify them for which program, which option within the program is best for them. We don't expect real estate agents to be lenders. You don't have to memorize all these guidelines, but I'm going to give you a general overview so that you can kind of see how flexible the programs are. And then your number one goal, I'm hoping you leave today, is that you can identify the need. You talk to a client and your questions might be as simple as, do you have down payment money? Do you have closing cost money? Do you happen to be a first-time home buyer? Do you happen to know where your credit score might be? And what kind of home are you looking for? And that may help you to decide, whoa, down payment assistance programs might be a really good fit for this person. Or you don't want to lose out on a sale. And if they're hesitating, I don't have the money, I don't have the down for this $600,000 house. I don't have $18,000 for a down payment, more for closing costs. Immediately, it should key you, wait, I know about down payment assistance programs. I know lenders that are doing these programs. Let me be the link to help this borrower get down payment assistance. And so as I go through these guidelines, this is general program information. And when it comes to the complete program guidelines, the interest rates, the applicable percentage rates for those, and any of those additional things are going to be available through our lenders themselves. And of course, today you're here with one of our lenders. I highly encourage you to talk to him after and use him as a resource for referrals. So let's talk guidelines. I talked about the first mortgage loans, that they are all 30-year fixed rate. Government loans are available and conventional financing. Our conventional loan happens to be a Freddie Mac product specifically for housing finance agencies like ourselves. The first mortgage loan amount goes as high as $766,550. Of course, we can go a little higher if it's an FHA loan. So we don't have purchase price limits. They can purchase whatever size or however expensive that house is. It's the loan amount that we have a cap on. The eligible properties. Our programs are only for owner-occupied residences, so they have to be intending to move into that property and live in it as their primary residence. We do not have a restriction on how long they're in that property, but they have to be intending to move into that property as a primary residence when that mortgage loan closes. We can actually finance up to 4 units, so single-family homes, 1 to 4 unit properties, townhomes, condominiums, and even some manufactured homes. No second homes or rentals would be allowed under our programs. As I mentioned, the programs are available throughout the state of California, so it doesn't matter. It's not limited by jurisdiction. And the down payment assistance funds can be used for down, closing costs, or towards a first mortgage. If your borrower is a veteran and can qualify for a VA loan, it's 100% financing loan. So you think, why would they need down payment assistance? Because they can use this money and apply it to the first mortgage and lower their monthly payment, lower their mortgage loan, lower their monthly payment. Same thing with a USDA loan. That's also 100% financing loan. So keep that in mind. Now we do have an income limit on our conventional product only. So if they're going with conventional financing, we have an income limit. but it's not as restrictive as you might be thinking. We are talking about low and moderate income borrowers. And I'm going to take you to the website. I'm going to show you where to look that up because I want you to see in real time how flexible those income limits are. But when it comes to government loans, FHA, VA, and USDA, we don't set income limits. So you would have to follow loan agency guidelines. So if USDA has some income limits, then we follow their guidelines. We don't have any requirements for a home buyer education or additional counseling. If it's required by FHA or by one of the loan agencies, based on them being first-time home buyer, they would have to go through that. We don't add any additional requirements that the loan agencies do for home buyer education or counseling. And one of the things I want to mention right here is that if a borrower owns another property, they can still qualify for our down payment assistance programs as long as the one that they're purchasing is the one they're going to be moving into as a primary residence. Okay, I'm going to flip you over to the website really quick. Let's see here. I'm going to make sure that you can still see my screen. Okay, this is the website. Can you guys see this?
Yes.
Okay, so this is what the homepage of our website looks like.
Oh,
Now,
the website's not showing now, not yet.
okay, hold on. Let's see here. New share. Thank you.
Sure. We just saw your slideshow still. There we go.
Okay, so this is the homepage of our website, gsfahome.org. You can find additional information about programs here. And this menu called Business Resources is going to have a lot of additional information for you as a real estate agent to learn about the programs, find marketing literature if you want to hand out flyers to some of your clients or co-brand those flyers with your loan officer. So there's a lot of resources in here for you. And of course, the menu for programs is going to give you more information about our programs. But I'm going to take you directly to the link for the income limits on our down payment assistance programs. You'll notice that the box for the government loans, FHA, VA, and USDA says we don't set any income limits. But over here on the right, the Freddie Mac conventional loans, there's an income limit. It is based on where the property is located. So you're going to look up the county where the property is located. And then it is based on a qualifying income. So only the people who are on the mortgage loan application qualifying for the loan are going to be included in the income limit. So if you have a two-person household, two-income household, and only one person is using their income to qualify, then that's the income that has to be at or below our income. It's not household income, it's qualifying income. So I'm going to look up, let's see, what county is Rancho Cucamonga in?
San Bernardino County.
Okay, thank you. So we're going to look up San Bernardino County, and you'll notice, I don't know if you guys can see this on your screen, but the income limit for San Bernardino County, the income limit is $196,560. Now there's another calculation on here that is 80% of the area median income. And that's just because if someone falls into the lower income bracket, there's some additional benefits available to them in terms of pricing on the mortgage loans themselves, okay? But the income limit here in San Bernardino County is $196,560. That is definitely moderate income. Sure. And I think Riverside is the same. So I think I'll pull that up for you as well.
And we have one question you want to.
Yeah. So same, Riverside County is also $196,560. You have a question for me?
So the question is, can mom and dad be on a loan for one of the kids and not have to live in the home?
Can a parent be like a non-occupying cosigner and the child is the primary resident?
Yes, we do allow for non-occupied borrowers, non-occupant borrower. What I would say is talk to the loan officer about that because I think that's available on conventional financing, but maybe not on the government loans.
Okay, thank you. Does it, with the parents being added in that scenario, would their income contribution be in the bucket of being under the income limit?
If they are on that application for the loan, yes, then their income will be calculated as well.
Who's ever on the loan application, it combines.
It'd be combined, correct?
Perfect, thank you.
Yeah, good question. Okay, so let me take you now. So we looked at income limits, and that's the basic guidelines of our programs, okay? I mean, I talked about the first mortgage loans, types of loans, the maximum loan amount, the types of properties, what you can use the down payment assistance funds for, a little bit about the income limits, which only apply if they go with conventional financing. So now let me show you what the down payment assistance looks like. For the program that I'm talking about tonight is the GSFA Platinum program. It's our most popular program. And that program allows down payment assistance up to 5.5%. The debt to income ratio goes to 620, I think, or 640 FICO scores. We have another program, I think, that goes to 620. So the debt to income ratio is 45% if their FICO is below 680, and up to 50% when their FICO is above 680 or 680.
Can you slide go a little bigger again, please? And that's.
Oh, I'm sorry. I have it on the share or on the screen. Second. Sorry.
No, you're good.
Oh, there we go.
Thank you.
Can you see that?
Perfect.
So the FICO score requirement for Platinum is 640. And the maximum debt to income ratio could go as high as 50% if their FICO is at 680 or higher. Manufactured homes have a little bit of a requirement there. They have to have a 680 FICO if it's a manufactured home, and a maximum DTI of 45%. Okay, now there are 3 different options within Platinum, and you're going to get a copy of this slide presentation, but I just wanted to go over these 3 options so you can see what the down payment assistance terms are, and be thinking as you're talking to a borrower, are they going to fit into Platinum Standard, which means they might have down payment assistance like this, or might they be a different type of occupation that qualifies for something else specifically? When it really comes down to it, your job is just to link them up with a lender who does the GSFA Platinum program, who can figure out which option is best for them. But let me just go over what the down payment assistance terms are so you have a good understanding of it today. So Platinum Standard is the option under the Platinum program that applies to the vast majority of borrowers. No specific type of employment is required. They can have any kind of eligible or any kind of qualifying income from any kind of employment that they need, okay, or have. But the terms on that down payment assistance are these. It's a second mortgage. In other words, we're loaning them this money. It's sized up to 5% of their total first mortgage loan amount. It has a 15-year term on that down payment assistance second mortgage, which means there's a monthly payment on it. So they're going to be paying back that loaned money monthly, and the rate on that is going to be the same as the rate on the first mortgage. So if their first mortgage rate was 6.5%, the down payment assistance second mortgage piece is also 6.5%. And so it's factored in their monthly payment. They have a monthly payment on the first mortgage, they have a monthly payment portion for that second mortgage, and it's amortized only over 15 years. When we are looking at people who are in specific occupations that involve law enforcement, healthcare, education, they are going to qualify for the Platinum program under an option called Platinum Select. So you work with a borrower and you find out they're a medical or a healthcare worker. They work in law enforcement, whether that's a police officer or support staff, dispatch operator, anyone who works within the realm of law enforcement, firefighter, paramedic, emergency medical technician, any kind of support staff to those occupations, anyone in education, public or private, whether that's teachers, administration, someone who does maintenance on the property, any of those occupations, they can qualify for Platinum Select. Now, the difference here is that their down payment assistance second mortgage is their down payment assistance is a combination of a second mortgage or a loan, as well as a gift. And the gift portion gets forgiven immediately at close of escrow. So that's a little bit more advantageous for people who work in these occupations. The DPA second mortgage is 3.5% of the first mortgage loan amount, fully amortized over 15 years with a note rate the same as the first mortgage. But then they can get an additional 1.5% in assistance as a gift that is forgiven immediately, giving them a total of 5% in assistance. Now, if someone is going to get an FHA EEM loan, you've heard of those energy efficient mortgages, or they go with USDA financing, they too could qualify for Platinum Select regardless of their occupation. Okay, so if they're in an eligible occupation, they can do any of the mortgage loan types. They qualify for this type of assistance that's a loan and a gift, or if they are in one of those specialized mortgage loans. Now, the third one under Platinum is called Assist to Own. And this one is specifically for people who are employed by the county itself. So if they are an employee of San Bernardino County or an employee of Riverside County, then they would qualify for an option of the Platinum program that provides their down payment assistance as a deferred second mortgage. It doesn't have an interest rate on the second mortgage. In other words, they're not accruing any interest on it, not making any monthly payments, and it's actually just paid back down the road when they sell the property, they refinance the property, or at the end of 30 years. So a county employee has an even better little component under this program, Platinum. Now, which one, whether it's the standard, the select, or the assist to own, is really your lender is going to help them figure that out. But I wanted to go over it today just so you can see the terms on the second mortgage for the down payment assistance. And you'll get a copy of the presentation. Now, some people, as I'm talking about this material, may hesitate and say, but if they're paying this money back, where is the benefit? If this is added into their monthly payment, how is this helping a home buyer? Well, my question for you as a real estate agent is, how many times does coming up with cash resources for down and closing costs stop someone from buying a home? How many times do they hesitate and wait longer because of that challenge? How many times do you miss out on a sale? Because down payment assistance is just a tool. It's a tool to help them to purchase now rather than having to wait and save up for that down payment and closing costs money down the road. It helps them to start building that financial security today. So the question is, does waiting make sense? We know that home prices are going to continue to rise. The estimate this year from, I think it's from California Association of Realtors, is I think it's like 6% for 2024. We know that interest rates are going to probably continue to rise for a little bit here. Maybe they'll level off, but we're probably not going to see rates back down in the 3s and 4s for some time. Rents continue to rise. How long would it even take them if they were saving to come up with that money? So I'm going to go back to that scenario we talked about. It was a purchase price of $794,000, the first scenario we talked about, and the down payment assistance that was provided was 5%. That was $38,000 and some change. If you saved $500 a month, it would take over 6 years to save $38,000. And in 6 years' time, at an increase of 5% in equity, that home, that same property, is estimated to cost over $238,000 more. Or look at it like, if they got into that property today, they would be building that equity of $238,000. Or not buying that home today and waiting, they miss out on that equity. So It's just a tool to help people to purchase now rather than having to wait. Is it the right fit for everyone? No, but it is a tool to help you talk to your client and find out if it's a good scenario. If you should refer them to a lender that is doing down payment assistance programs from GSFA. And ask the questions, find out if it might help preserve that sale, help them buy a home. Now, how to get started is simply just talking to the loan officers who are doing our programs or approved to do our programs. I put Joe's information up on the screen, hoping you'll talk with him directly. Create a network so that you both can refer to each other. You get a borrower, you find out they don't have money for the down, or they don't have enough for the down that they need or the closing costs. Refer them over so that lender, so that CMG Home Loans can go through, approve them for the GSFA programs, find out which one's the right fit for them, and process the application and the loan. Now, I mentioned to you that the process is actually quite seamless, and I thought I had it on the screen, but I don't see that slide. So what I want to go over before I close out is how easy this process is for you as a real estate agent. Because there's no additional compliance package that has to be sent to GSFA before close of escrow. When your loan officer qualifies the borrower for a GSFA down payment assistance program, they're going to go in and lock in the interest rate on that first mortgage loan. And at the same time, they're going to get a commitment letter for the down payment assistance. And then we delegate the entire mortgage loan process to the lender. The lender goes through the normal closing steps, the normal approval package. And when they close that loan, it's done. There's no delay that it's going to cause in your whole escrow. And that's something that I think you need to understand, because it matters when you're talking to a seller. Because if you hesitate and you say, I don't know if you want to take an offer like this, it has down payment assistance on it, it could prevent them from taking an offer from the borrower if they think that this is going to slow down the process, or there's a risk involved. When the lender locks in the interest rate and gets that commitment letter, we have committed that those down payment assistance funds will be there at close. And then on our website, we have literature that you can print off and customize with your own contact information, and possibly with the loan officers that you're working with. We have downloadable flyers and brochures in English and Spanish about the program. So you don't even have to memorize all this information. Download a flyer that you can hand out to a client that has your info on it, has Joe's info on it, so they can call and get started. Down payment assistance is really a tool to give you the opportunity to make more sales while helping home buyers. Provides financial assistance up to 5.5%. They don't have to be a first-time home buyer. They can qualify with FICO scores as low as 640 with the Platinum program. We have flexible debt to income ratios, variety of mortgage loan types, very high income limits on conventional loans, no income limits on government loans. The programs are available throughout the state of California, and it's an ongoing source of funding. We aren't allocated money from the state that will run out when we need it. We're actually working with the investment market, and we use the sale of mortgage-backed securities as closed mortgage loans through our programs to generate additional funds for more down payment assistance. And so it's not going to be a pool of money that will run out when you need it. And for you as a lender, qualifying more home buyers means more sales. And because it doesn't slow down escrow, it should make the process a very seamless one for you. And so the biggest thing to do is to create that network so you can refer your borrowers. And if you don't believe me, I encourage you to go to our YouTube channel and actually watch some of the stories in our YouTube series called Journey to Home Ownership, where I interview actual clients who've used our programs and let them talk about how the process went, how it was working with our lenders. And sometimes they even share, it's a real estate agent that was the first person that told them about the programs. So please visit our YouTube channel if you'd like and hear it from our actual clients. And so with that, I'd like to open it up for some questions. I'll make this presentation available to Joe after, and he can send it out to all of you.
Yes, I do have to make sure everyone gets a copy of the presentation as well, the slides. And we have a couple questions already. Yes, please.
So two questions.
Two
First one is, how much time do borrowers have to secure a home under contract? No, she said we don't run out of funds, but is there a time once you reserve, how much time does a buyer have to secure a home under contract?
Did you hear that? I believe the time when we lock in the rate, it's 60 days. And that means they're already in escrow. And we have that countdown to 60 days of the lock period.
That is correct. And we encourage the lender to determine when's the right time to actually lock in the rate, because we want to make sure that you know your loan process for closing in time and getting the loan delivered after closing to the master servicer. But the lock itself is a 60-day rate lock. That is correct.
Second question is, can mom and dad and the son have money in the bank and not use any of it and take full advantage of the down payment assistance doing the 5% as much as they can from the program?
Okay. Yeah, is there any scrutiny if we submit, they have assets to use, but they prefer to use the program instead? There's no delay.
We don't have any restrictions on that if they don't want to use their cash resources. So we don't have any problem with that. Like if they want to just keep it as reserves, yeah, not a problem.
Fantastic.
Any website where we can check the daily rates?
The rates are posted daily, correct? Online? Is that the?
They are.
Okay.
They are available. There's a link on our website under that main menu for business resources that take you to the loan reservation system, and you can see the rates for platinum. But you know, it's a full rate sheet, so I do encourage you to work with the lender because, like I said, there's platinum standard, then there's platinum select, platinum assist to own, and then you've got borrowers who are in moderate income versus borrowers who are in lower income, and the rates are different. And how much an assistance is available can change a slight bit depending on that day's pricing. So yes, they're online, but I also would encourage working with the loan officer if you want a better understanding of the rates for the day.
I don't know, if I need assistance. Anyway, I can ask somebody who's helping with the reason.
It's public online.
Do you want to pull it up? Is that you want
to read it because this is the first time I will be working with this program.
They can call the number on the GSFA, right? They can help give more guidance on the rate sheet or what they're looking at.
I mean, I can pull it up and show you where it is. I mean, it's not that difficult to understand. It's just that there's a lot on the screen. Do you want me to share it?
Do they have a
That's okay.
calculator like Alpha?
They do. There's an income limit, yeah, on the link. Could you go back to the screen which showed the income limits, please?
Okay.
96.
For somewhere,
Yeah.
in the Riverside.
They were matching the same, which she'll show again. Yeah.
Can you see this?
Yes.
So it's conventional financing only. Riverside and San Bernardino were both 196,560. If you want me to look up another county, most of those down in your area are going to be really high like this. I think.
Yeah, those are two sister counties we usually normally use, Riverside and San Bernardino.
Let's see, Orange County might be a little.
Yes.
I misunderstood something. I thought the second was the same price as the first. Does the first come from Golden State Finance as well, or why is there a rate sheet?
They set their own rates for each day. That's public access.
So it's different than what maybe your
Yes.
first was.
For this specific program, yes. For this agency to use their down payment assistance, they set their own rates each day. Yeah. Yes.
Do they fund the first two?
They do fund the first one. Do you not you also purchase the loan from the closer, the approved lender that's closing the loan?
So we work with a servicer, which is US Bank, who services the Platinum program. So all of the loans are sold to US Bank after they close. So
Okay.
US Bank purchases them from the lender. Do you
Yeah,
want the rate fee?
Sure, just a quick peek at it, please.
So under the business resource menu, there's a link for online reservation system. And when you come here, there's a login for the lenders who are going to actually lock in rates. Lock rates. But under the message center, it says today's rates, and it gives you a link to Platinum. This is the rate sheet. I'm going to try to make this a little bit bigger for you. But what you'll see is there's 3 columns. There's standard, assist to own, which was for county employees, and select, which was for those people in those special occupations, law enforcement, education, healthcare. And so what you do is you look for the first rate, 6%, and a second, so at a 6% first rate, there is no down payment assistance available today. But as you go up in rate, assistance is available. So at 6.75% on the first mortgage, 4.5% in assistance is available on the standard product. See how that works? So up to 5% is available on Platinum Standard at a rate of 7.125% today.
Fantastic. Yeah, that makes more sense to the lender's eyes, how to read this.
Done.
We fund the loan and we sell it to them. Yeah.
First as well.
Yes,
They service.
they will service, yes. With the lender closes it, then we give it to them to service.
Question. No,
Any other questions?
No, yeah. Maria.
I think you did a fantastic job. You clarified all the questions.
Yeah.
You'll have a copy of this. So if there's additional questions, reach out to Joe. He's a lender that's been doing these programs, but you can also call the GSFA office if you need to.
Thank you so much.
Thank you so much for your time. Wonderful presentation.
Have a good night.
You too.